What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. Today's date is March 1st, 2021, a new start to the month, and it was a big day today in the markets. Today's video, we're going to be going over the indices. We're going to be looking over some stock market indicators. Some interesting stuff took place. It was a very powerful day in the markets, but there's a couple red flags here why I don't quite necessarily yet believe that this was a real powerful move. Some of the charts do suggest that the market will continue to go higher, but there's a couple things kind of leading me to believe, what's going on behind the scenes here. So we're going to get into that all today. Let's go ahead and hop into today's episode. All right, welcome back. What's up? Here we go. We're looking at two seasonality charts. What's a seasonality chart? Well, these are, what the stock market does based off of previous trading days or years, months, etc. And I wanted to show you two different ones. Okay, first off, the post-election. So right now we are here at March 1st. Typically, from a post-election seasonality perspective, you can see the S&P 500 typically kind of goes, up, down, sideways. It doesn't do much in the month of March. However, April really takes off to the upside. And you can see an average year here, over here, the S&P 500 index, the seasonality, actually typically falls from February and a little bit more into March and then really starts ramping up mid-March. Now, this can be off by a little bit. It might not perfectly match up. You never know. But what we're seeing today is we're seeing a pretty powerful day in the market. So one might think that maybe that February drop that we saw, all that scare, all that fear going into March could be an early sign of a continued rally or potentially a fake out, right? So we're going to be looking at some key levels while we hop into the indices, but I do wanted to, really point out here, typically from mid-March to the end of March into April, you can see from a seasonality perspective, you get some pretty big run-ups in the market. So the question really, what we need to determine for ourselves is if we're at that point right now where we can see a big burst of energy to the upside. Like I said, while we go through the stock market indicators, there are going to be various charts that even you will be looking at and you'll be like, what's going on? That doesn't make much sense. Like, how did the market move this much? So we'll get into it. Let's hop into the Wilshire right now. First off, let's look at the 3-bar pattern right here. So first off, huge red day, right? All that fear in the market when everyone said, I put out a video right here that said up, up, and away, and it was talking about these 3 candle bar patterns right here, okay? So morning star. And when I said we needed to get confirmation, we never got it. And then all of a sudden, all the comments came in, right? Oh, no, it's not up and away. I see. And then all of a sudden, bam, powerhouse day. And then you can see right here, it's another morning star pattern. You take a big red bar, you have this kind of, doji-ish type candle, small real body, large range, and then you get another large range candle. The first thing that I want to call out here is look how large the range candles are here. So we're seeing a lot of market volatility, a lot of chop taking place within a significant range. So we don't really have a direction as to where the market is going right now other than a period of consolidation. And these can be very frustrating times in the market. Overall, though, the context is still bullish. We're still positive on the year. We're back above the 20, back above the 5, back above the 10 EMA. Now, this right here, like I said, this is a morning star type pattern, but once again, we need confirmation. And the confirmation that I'm looking for is still to have a closing day above 41,750 on the Wilshire. This is the broad market index. And then we have to go tackle for the new highs. We have to get above this 42,000 to 42,250 range. So right now, I don't see this, as I don't see much direction as of now. I see confusion in the markets and trying to figure quite out. However, when you do look at the ideals in the favor, we are in bullish context. So you got to keep that kind of, in the back of your head. S&P 500 on the daily time frame. Look, we came to the bottom portion of this channel and the 50-period moving average. A lot of fear in the markets, right? So the other day, we put out a video called it was basically how to prepare for a stock market crash. It wasn't predicting, it was preparing for if there actually is one. And there still could be, obviously, right? There will be a market crash, there will be a market correction, there will be pullbacks through, as time continues, eventually, right? That it will happen. We don't know if it's going to happen here or later down the road. We don't know. Okay, so we came down here at this 50-period moving average and the bottom portion of this channel, and that presented a decent buy opportunity. As you can see, we had a huge gap up and then just a ramp up higher where we got right back above the 20-period moving average. So this looks like if we get continuation, it wants to go tackle 4,000, that psychological level, but we really need to get still confirmation and a move above 39.50, and that could take a little bit of time. Or if we continue to get these huge, massive gap ups, then it might not take that much time. Now, remember what we talked about. When it pulled down here, we said last time, when it pulled down here, that presented some huge rallies, right? Pulled into the 50, saw a huge rally. Very quick and aggressive. And guess what? The very next day after we tagged this 50, bam, that's a pretty large rally today. You can see the price percent oscillator is flipped like it's going to cross over to be bullish, but it's still not there yet. You can just see the move up and it's above 0. On the 30-minute time frame, this is where it gets a little sketchy. So you see this monster huge gap up. We saw the bullish divergence taking place on the 30-minute time frame, but it's still trading within this channel. Okay, so you can even draw a line from up here to down here. That could be, a trend line that it has to get above. You can see the VIX down below on the 30-minute time frame. We have a gap down here, so perhaps we come to fill this gap and then we bounce higher. But keep in mind there is a gap above us, which leaves the opportunity for that gap to get filled. So it means that if we do get a vol spike, we could see this market move down lower. Now, you can see this gap right here. Okay, well, when we got that vol spike, that came and filled that specific gap. And this big vol spike, this big vol spike right here to fill that gap brought us from here to the lower range. So from 392 to 380 very, very quickly. So let's be cautious and, aware of that. But overall, we're looking for a break above this 392 to 394 range, which is still acting as an area of resistance. So let's look at the Dow Jones. Dow Jones, right back above that 31,250 level. Price percent oscillator does look like it wants to start crossing over to be a bullish crossover. But we're still within a large consolidation period, right? There was a lot of weird doji candle price action happening here, and now even more weird price action taking place where we're seeing just these huge, large range candles. But really, the price action's not going anywhere. And remember what we talked about in previous videos about large range candles, how they bring up a lot more drama and emotion. People start getting a little crazy, right? So, for example, we see a huge green day today. People are going to be thinking, okay, yeah, it's going to rip higher, it's going to rip higher. And you don't know necessarily if you don't plan out certain key levels. So, yeah, we're above 31,250. The overall trend right now is still very bullish, right? 20 above the 50, about above the 200, nice spread, all trending upwards, and we're a positive on the year so far. That's that gray dashed line. So things right now, they're looking good. Now, if you've heard on Wall Street, right, we call this on Tuesdays, it's Turnaround Tuesday. So there's always a possibility for the turnaround. However, keep in mind the context. While you're trading, keep in mind the context. One reason why I haven't been saying, okay, if you're going to short the market, make sure you're like hedging something. Like if you just do naked puts to the market or various stocks, you can find great setups for shorting. I'm not saying that, but given the context of the market, shorting it, you'd have to get pretty darn lucky because it's a very quick move and it has been a quick move. So if you shorted up here and you caught 2 days, you might still be in the position because it was only a 2-day move. However, if you realize the range of the candles and the force of the move, it's like a rubber band stretching, and then snaps back. That's what you're seeing right here. So you would have wanted scaled profits coming into that 50-period moving average. Here's the 30-minute time frame for the DIA. This was that bull trap, right? We broke out and then just crashed right below it. And now look, we had crash down below it. This could be a bear trap, right? So we thought, came back tested, that would have made a good short opportunity. But now if you started shorting into this because, all the fear in the market, well, guess what? Well, after hours, the futures market gapped us up, and that would have just completely destroyed a position. And look at this gap. It gapped above 313 and the previous high right here and then ramped up even higher. So this is this is not normal market functioning by any means. Like, look at these days. It's literally robotic. It goes gaps down, up, down. Like, it's just crazy price action. And look, look where it closed. This is the same place where we were, February 16th and basically over here too. So, February 10th. We're not going anywhere. It's very undecided. However, keep in mind, like I said, the context is still very important. Russell 2000, I just wanted to draw out a period of consolidation here as well. Now we notice this bearish crossover take place, right? And we're still trending down here, but we're in this channel between 230 and 215. So a $15 period of consolidation where we're seeing a lot of chop. Overall context, still very bullish, right? 20 period above the 50, above the 200. All right, the last time we saw that bearish crossover was right around here, and you could see that we pulled down a little bit, came into the 20 period, and really ramped higher. So we're seeing, and we did close below it slightly, and we also did it right here. But after each tag of the 20 period moving average, notice the huge move to the upside. So are we about to see another just aggressive move to the upside right here? That is left to be seen, and we don't know quite yet. Now, what is interesting is there was a lot of selling volume that came in these last 2 days. Today's volume, on a big up day, up 3.5%, not much volume, not much volume taking place there. On the 30-minute time frame, descending broadening wedge pattern, huge gap up, now we can see it more closer. We had that positive divergence. I'd say if we get above this trend line, that could be a potential breakout of a descending broadening wedge. All right. And we've seen that before. We posted that on the DIA, the Dow Jones Industrials, and we said if it broke out and we were looking at the hourly time frame, the target would have been around 32,000 on the industrials, and we hit that, and then we started seeing these big red days. So this looks like a very similar setup. It's on a lower time frame, but if we do get breakout, we can go from 230 to 215. So I would say maybe if we break out of here, we might see a 15-point run quite easily. So we'll keep an eye on that. NASDAQ is the only one that's structurally broke down from this channel, and this one looks like it can still be potentially bearish. However, we're still kind of in the dark. Overall context on this specific chart, bullish, right? 20 period is trending up, 50 periods trending up, 200s trending up, and there's a good spread between all of them right here. We closed, we were negative on the year. Today, just a big solid green day, just across the board. Boom. Is this the fake out? I don't know, but we do need to get above 325. We need to get back above the 20 period moving average too. And this does look like it could potentially just come up here and then back test this. So I thought that this might be a little right shoulder. Perhaps it actually builds out even a bigger one if we can't get back within this channel. And then if that was the case, you have a left shoulder, a head, and a right shoulder. And then the yearly open is where the neckline would be, and that could cross over. But overall, strong day, up 3% on the Qs. And then you have the price percent oscillator is right around, flat today, but it does look like if you look at the histogram, it could cross over and maybe potentially start getting bullish here. And once we get into the indicators, I'll talk a little bit more about various things that I'm kind of seeing behind the scenes here. And now on the Qs on the 30-minute time frame, look where we closed. Last time we closed there, we saw a pretty big down day. We called this bear flag out. It broke down through to 311. So it's been in this, since February 22nd, February 23rd. It's been in a trading range between 324 and 311. So if we start breaking out of this, I would imagine we'd go try to attack these gaps, but there could be resistance up ahead in those gaps. So keep that in mind as well. Now let's get into the stock market indicators. We're going to go over a few indicators here because, like I said, there's some interesting stuff. Like, it was a great day in the markets, but we're seeing some interesting stuff take place. So first off, for a pretty darn bullish day, I would imagine the put to call ratio, the CPC, would have actually kind of went down, but it was actually a bigger spike. Actually, we're at a reading, if you see the purple line shaded, that we haven't been since basically right around, I think we're printing a higher, I'm just going to call it from mid-December. So it's been a while since we've been at this reading. So interesting. So which that means to me is we are moving, the 10 period moving average potentially might cross over that 0.8, which is our quote unquote sell signal. So if it does cross above there, I am typically very, very cautious in the trading environment because it does show the possibility for more markets to get a little bit more shaky. And we're not above there yet. We haven't been above there, crossed above there from the downside in, since October of last year. So you can see it crossed over here. And if you just look down, went up just slightly, but then bam to the downside. It wasn't like a crazy drop. But if you do remember, it kind of was, because that 3,200 level was actually one of the levels we called out, saying if we get down back to 3,200, I'm going to be buying in right there. And you never know, if we start crossing above this, that might indicate that we might see some more downwards pressure. And if you haven't watched yesterday's video, you can watch yesterday's video, because I did map out some key levels that we can get some pretty significant bounces from. And you got to be prepared for that kind of stuff. You don't want to be part of the panic. You want to be the person that, even if you are panicking, you have a plan in place. So we're not there yet, and this could change very rapidly. So we'll keep an eye on it. Now the VIX, that 25 level, still tends to be that just an important level. Big gap down on the VIX, so that leaves us kind of exposed to potentially come back to fill that gap. But perhaps maybe we might fill that gap if this crosses above the 8 there, and then we might see the gap get filled up back up on around 2750. Now 25 broke below that, right? And then we started heading lower. Maybe we start drifting more lower, but it's been kind of trending higher lows here, which means that the trend is up on volatility. I would say that another key level to watch out for is 20 and even this gap. So 20, every time we come into this range, it seems like a good place to take some profits off the table, because very shortly after we get these pretty large spikes to the upside. Now, here's the lumber to gold ratio. This is the 13-week rate of change. You want to wait for the week to actually close out to see where it goes, but you can see we are still trending down right now temporarily. Like, this could change, like I said. But what happens is if we get below 0, that is that risk-off type of environment that you want to be prepared for. It's saying that the conditions for a market, increased volatility are very real, and it has been a very, very powerful tool in the past. You can see it crossed here and said, it said, okay, the possibilities for a market crash or a market correction or, increased volatility are very real. We had the March crash right here. A lot of people say, oh, it's, the pandemic, you don't factor that in. It's like, of course we do. I just don't need to mention it every 5 seconds. We crossed down right here. You can see we pulled back. We crossed right here, and then you can see that gave us plenty of time to be aware, and it, 3 weeks of straight down. So we went, boom, boom, and then that big down week. So, and then you can see it when it crosses back above, that is a risk back on in the stock market. So we'll keep an eye out. We need a weekly close below 0 to give us that kind of signal. And like I said, it doesn't mean that a market crash is going to take place. It means that the conditions for something to happen are real. They're very real. So we need to be even more paying attention. All right. And like I said also on this, I looked at the 3-week rate of change. We are negative, meaning that it sometimes trades. The 3-week rate of change is below 0. That one flips on and off more frequently, so it's wrong more often, but it can also be right sooner. Okay, so it flipped negative, and we saw these big couple of down days in the market. So that gave us a little bit of a heads up warning. Now, we don't know if it's going to turn into anything greater than that. As you can see, today was a powerful up day. So we're now going to be keeping an eye on the 13-week rate of change to see where that goes. Now, here's where it gets kind of interesting. So we did call out that big negative breadth day, and that could have been overextended like we saw right here when it pulled back into the 50 period. And now you can see that we did have a pretty significant up day back to 39.1, and it looks like it wants to continue to move higher. However, what I did find interesting was it was a pretty powerful day to the upside, and I just found it interesting to see the breadth still negative. So minus 21.32 on the NIMO. I don't know. I just found that to be just a little confusing, a little off. So this big move wasn't really supported by any breadth. I'm still going to be keeping an eye on these overextended ranges if we get a big move to either direction. Typically, when we get to minus 60 to minus 80, it's a quick spike, and it does offer up a good opportunity to potentially play a bounce. Where it's at right now, I'm just more confused than anything. So we saw a big move, but yet it was on really weak breadth, so nothing too crazy. Now, this is the BP chart, and I'm only going to show you the one for the BP NDX. Basically, what this is, if you don't know what this is, this number right here on this chart represents how many stocks in the NASDAQ 100 are on buy signals. So this number represents 41%. And if you don't know, the buy signal is based off of point and figure charts. They look like gigantic tic-tac-toe boards. That's not as important. What you got to understand is how I use the indicators. I look at this RSI for overbought and oversold readings and positive and negative divergences, because it does help me really kind of add more ideals into my favor when trading. So we got overbought sorry, oversold. I always mix those two up and always get called out on it. And we did call out a little bit of a positive divergence where you can see the line here is a low and you have a higher low here, whereas here you have a low and then you have a little bit slightly higher low here. So positive divergence, and we called this out when it got there because it says to me that, okay, the NASDAQ, we can definitely see a bounce take place from here. And what you're seeing today is we're seeing a pretty significant move. And now we see this continuation to the upside. However, now we're not oversold anymore. So we got to keep an eye out for that. Now, this might come right back up to that 50, and then we might start seeing trouble. Or, you know, this was just taking its little breath from a big move, and then we continue that move to the downside. What we can watch out for now going forward is a positive divergence, okay, from here to the next one. So it would look very similar to right here. Okay, so if we get a very similar type looking RSI here, whereas we saw here, you can see we actually saw a big move to the upside shortly thereafter. So that's the next thing that we can be keeping an eye on. Now it's time to get into commodities. I want to start off with gold. We'll get into silver as well as Bitcoin today too. And I want to show you longer term charts. I've been talking about them, but now I'm going to bring it back and to show you. So gold's been getting beaten down. We are oversold on the daily time frame. You know, lower lows, lower highs, and lower lows. And it's, you know, in this period of consolidation, well below the 50 and the 200. Yeah, that death cross right there. Slight positive divergence right now, currently on the price percent oscillator. Doesn't mean that's going to hold, but I just wanted to call that out. Now, this pink box, that represents another area where I'm going to be buying a little bit more. I marked this target out a long time ago on the yearly chart, and I plan on doing it now. This confluence is nice because it's coming back to the low end range of this consolidation period. At least it's consolidation as of right now, and it's in this area of support where you can see you can have the resistance, and then held up as support here. So I do plan on buying potentially even tomorrow if we can reach down into this range. And then if I look at the yearly chart, you can see, okay, it's very bullish looking from a yearly perspective dating back to 2000. You have this cupping pattern, right? And then now it's pulling back, and this pink box was 3 levels that I was keeping an eye on to continue adding to my core position. So we're reaching right down to 1700. That was going to be the first entry, which I did. I don't know if I brought it up on YouTube or Twitter. You can follow me there. But that's, you know, I posted it somewhere where I said if we start getting into these ranges, that's where I'm going to start buying, adding to my position. So we're here, almost there. I'm going to be adding to my position an ounce of gold, or I might be looking at like a physical ETF. I haven't fully decided yet based off of the premiums for the physical metal. I would like having a little bit more physical, but the premiums are getting pretty out of hand right now. So I might just get into something a little bit different. And that could be, you know, maybe a Sprott ETF, or, you know, maybe GLD. I haven't fully decided yet, so I'll be looking at that. Here's silver. I'm still in a silver position. I'm building a position currently right now. We've had some pretty dramatic down days. Overall, though, we're still here above this green trend line. It could technically go a little bit lower and we'd still technically be you know, above it. I could draw this green line from here to this line, but you can see here we broke down through 38.2 on the fib retracement level. We came back test it, and now, you know, we have this little inverted hammer, I guess, candle right here. I would say that when you look at the weekly time frame, this is where I'd be adding to my core position. I'd be looking at the 38.2 fib on the weekly time frame, which would put us right around $24 for silver. I think that would be an amazing opportunity if we can get silver down here, and I would feel very confident being able to buy silver down here, because, you know, if we do get that silver short squeeze, which, you know, it's not like a GameStop squeeze. Silver markets act completely different than just a single equity. So, you know, it's not quite as simple as, you know, some might think it actually is. But if we do get back into this range, I really like silver in this area. And then if we start breaking down even further from that level, I'd be looking at about $18 to $19 for another adding to the core position. I still have a strong belief that we're going to see gold and silver go higher, but it could take some time, right? Especially with what we got going on here in the 10-year yield and the just the markets overall. So here's Bitcoin. Look at we pulled down. I was waiting to hit 42.5. We didn't get it, unfortunately. So, you know, my trigger was ready. I was just about there. It didn't quite reach. And then, you know, how low we were at gosh, we missed it by a couple hundred points. Maybe somebody caught this and was like, yeah, no, we're basically pulling in. Let's just get it. And then bam, right up to the upside. So that was a, pretty solid move from a low of 42, around 42.5 to around 50,000. So, you could have made it like a $6,000 gain right there just by that call out. Now, we're not completely out of the woods yet, This could be a period of consolidation, but the overall context of the chart is still good. You saw something very similar take place here. Bam, to the downside up and then kind of consolidated. So that could be similarly to what's taking place right now. So we'll just keep an eye on it. But if you missed that move, unfortunately, I missed that move. It didn't quite hit my target, and I didn't jump in beforehand. So, that could have been a good, to right now, if you look at that, they're like, man, that sucks. Or, if this completely broke down to the downside, then you'd be like, oh, well, good thing that you, mitigate, or you waited till your entry point and then you got stopped out pretty much instantly. So now here's crude oil. I just wanted to show this, a couple big down days. Overall trend is still very bullish. I would say that we can ping pong around in here. It's due for consolidation because this thing has just been on a ripper. So I basically ran the fib retracement level from the last breakout area, and we're looking at around $57.64 where it could potentially pull back to, where I wouldn't get maybe even 58.82, just around that range. I wouldn't be too concerned if we start bouncing around and consolidating. I will say that we did just have that bearish crossover on the MACD, so keep an eye out. But overall, like I said, context 50 periods above the 200 and sloping up quite nice here. So we might still very well have a lot more room to go. The dollar didn't do much today, but you did see, we had a pretty solid update. We're kind of in this area of resistance, slightly breaking above it. I still overall think that the market got to get above that 92 level. That was that level we were watching here where it was acting as support, and when it broke down, we saw that forceful move to the downside, and now it's been in this consolidation trading range, since December. Basically, if you look at where we were here and just look to the left, we were trading right around that range in early December. So dollar hasn't moved much, but we did put in a higher low. So short term, bullish, and it's positive on the year so far. All right, so now, like I've been saying, is the dollar looks very similar to the S&P 500, but from an inverse correlation. So we got to kind of just keep an eye on this, because I do believe that if we get a short squeeze in the dollar, or if the dollar shorts do have to cover, I think that that's going to, I think you're going to see some disruption take place in the equity markets. All right, so let's look at bond and yields, because everyone's been talking about the 10-year, 30-year right here. No real movements today to really report, but yet we are still at a relatively, not a relatively high level, but we are high relative to where we have been just recently. On the grand scheme of things, we're still pretty low. We just have significantly more debt in our system. Here's the 10-year. We're in this kind of trading range, this resistant zone. I'm curious to know if we're going to continue to rip higher, or if we're going to dabble around in these areas. We are overbought here too as well. And then you take a look at the TLH. I put it on the weekly time frame. Big hammer candle last week. So if we get some follow through on this actually might, we might see some sort of a bounce here take place in bonds, which means yields could potentially head lower, and that could be very good for like the tech sector and even potentially gold and silver. So we'll see how, the rate of change takes place, or how forceful that move is, or if we can even get back above 47.50. But our overall, the TLH RSI is oversold. Nice hammer candle. We just need to see that follow through to maybe potentially see a bounce to the upside. All right, everybody, that's all I got for you on today's episode. Yes, we had a very big day today in the markets. I showed you some key levels. However, like I said, there are still a couple things that are concerning to me, and that's, you see the lumber to gold ratio kind of heading towards down this race, still got some movement to the downside, and then you see the CPC really spike up. And that's interesting to me too, because if we start seeing the 10 period moving up, that's that sell signal, and it doesn't mean that it's going to be right at all or by any means, but it is where I really do start pumping the brakes. And then on top of that, we have this negative breadth today on a pretty solid day in the market. So, it's unfortunately, we're at a time right now where we're getting a lot of chop, and, it's very, very hard to find setups or feel confident at least about specific setups. If you feel on edge right now and you're like, oh gosh, is it going to go up tomorrow? Is it going to go down tomorrow? Is it, yeah. It's, that one, you should step back and understand, like, you probably shouldn't be trading if you're that confused. But two, you should be totally fine with feeling confused at a time like this because the price action is absolutely bonkers. And anybody who says otherwise or acts or, claims that they know things as far as like certainty goes, they're really just lying because there are no certain things taking place right now. We're in very interesting times, to say the least. So be careful out there, per usual. If you haven't watched yesterday's video, you can watch yesterday's video where we talk about even more in-depth levels where if we do get a pullback or a crash or whatever you want to call it, correction, 10% correction, I don't know. We mapped out some key levels where we can see some pretty good bounces from. So that's all I got for you today. Talk to you all later.